All right, guys, good afternoon. Welcome aboard to the Aftermarket Recap. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thanks so much for taking the time out of your day to join me today and every afternoon, 5 p.m. Eastern Standard Time. May 18th, 2022. It is a Wednesday. What an ugly Wednesday indeed it was. Let's get straight to it. The Dow fell 1,164 points off the lowest levels of around minus 1,200. NASDAQ free falling down nearly 5%, 4.73%. S&P down 4.04%. The VIX, which we're going to get to here in a second, very important, 3096, 1862 to the upside, 18.62%. Equal weight S&P did a little better than regular S&P, down 3.76%. And IWM actually was the best performer. Small caps were the best performer out of the major indices. 10-year yields came back down 2.886% on a 10-year. Dollar came in strong, flexing its muscles against all currencies except for the Swiss franc and the Japanese yen, 103.90. Gold actually provided some kind of reprieve out there. Gold did turn green, GLD, 169.42. Silver down 0.95%. Take a look at high yield credit, continues to collapse, 76 now, down 0.82%. Investment grade bonds got bidded today. So again, kind of seeking the safety of bonds is what the market is showing us. So let's take a look now at some commodities. Crude oil, we also had a bigger draw than expected on the inventory report. They were down 2.5%. Gasoline, bigger than expected draw, down 5.75%. Gold futures, down 0.21%. Silver futures down 1.5%. And Bitcoin actually did fare better than the stock market, interesting enough. 29,160, 1964 for Ethereum. So if you're a crypto holder, you're not the worst performer on the block, even though it was a bloodbath today. First things first, let's go ahead, and I'm going to go ahead and continue this analysis here on S&P. I know I always start with S&P. So we talked about yesterday that reverse head and shoulders. We broke above 40.38 yesterday on Tuesday. We retested, and then we continued higher after Powell. So speaking to my team last night, we were looking at 41.01. I was long. 41.01 was my level to move my stop loss at break even. 41.01 did not get, it was close. I was expecting it to get 6 points away. We did not get there. This cascade, I expected this, well, not this much, but I expected a retest of at least the neckline of around, well, not the neckline, the first level of support. And I typed this on the blog today, right around 39.75-ish. And then down to that neckline of around 39.50. I thought we would gap up today. I had calls. It didn't work out, unfortunately. I did hit calls on AMD. I put that on Instagram, on Twitter for you guys. It was a quick hitter. I hope you guys got it. But again, looking at S&P, 41.01 was the level I was looking for. That was that Russian invasion low. Felt like that was the level we're going to get to complete, or if not, continue the inverse head and shoulders. What happened today? I had calls on Qs. I had calls on Facebook as well that I had to close, unfortunately. Very tough because I thought we were going to get this gap up to 41.01. I can get out of my calls and then see what the market action does. But Target hit today. Target's earnings were really bad in terms of guidance, and Walmart's as well. It just wasn't enough. So what happened? Everything that was considered safe, consumer staples, cascaded. It fell with Target. Let's take a look at the S&P heat map to give you kind of an understanding. 1 day performance on consumer defensives. Keep in mind, these are names that, hey, you're always going to shop there. You're always going to shop at Walmart, Costco, Target, and Dollar General. They took a beating today. And we talked about yesterday how consumer defensives were getting a little bit overpriced. Remember, we were talking about that, hey, you're paying for premium, but again, it's expensive. And it was just getting away in terms of how expensive they were. Let's give an example here. Let's take a look at the forward PE ratio on these names. And remember how much we fell. Costco's still trading at a 34 PE. Could get a little cheaper. We did fill that gap on the daily. I was watching, I do own shares. Walmart, 18 PE. Now you're starting to get to levels where it's attractive. Target at a 13 PE multiple on forward guidance. That's not bad at all. Dollar General, 18, a little more expensive. Again, I'm looking at Target for a possible buy because when everyone is freaking out, especially when you see valuations there. Now, valuations are only a part of it, guys. Understand that an asset is still an asset. We talked about that the other day with cars, like a Lamborghini. Remember, it's depending on what you pay for it and what's the demand, right? Right now, it seems that we're just getting this slow and surely not panic selling. So So we're getting just, in my opinion, what I see here is just margin calls, a lot of deleveraging, a lot of people selling their winners. Apple took a hit today. Apple, the big boys, the ones that have been just that were performing the last year, last couple of years. Let's take a look at the year to date. You can see that we're all down. Let's see one day performance. Apple down 5.644%. Remember, they had great numbers. Nothing really changed on their end. There was talk about China kind of pulling back in terms of handset orders. So again, some slowing in China. But Apple does this after every cycle. They always pull back as they get ready for a new cycle. So I don't think the context was okay in terms of Apple on that report from Nikkei. Microsoft down 4.78. Again, big winner. Google, Amazon. These are big winners. Tesla down nearly testing 700 now. And again, nowhere to hide unless you had some TJ Maxx. TJ Maxx had a great quarter. So there's pockets out there, obviously. But look at the one day performance. Berkshire Hathaway, obviously due to Apple being down. The banks down across the board. Just everything, what's happening today, guys. Let me go ahead and bottle it up here. It's throwing the baby with the bathwater. We're already getting analysts cutting forecasts. Negative and even more negative sentiment. But again, look under the hood. Again, are we starting to get to a point where is it just too negative? That can happen, yes. And that's where you start looking at valuations and why it's important, what you're going to pay for it. Remember, your dollars are now very scarce, or more scarce than it was in 2020 and 2021, obviously with rising interest rates. This is what the Fed wanted to do, guys. They couldn't control the supply chain. So what did? They decided to kill demand. How are you going to kill demand? Lowering asset prices, making money more scarce so people don't spend. This is the only way to cut inflation off like we did in the 80s. So back to the technical end of the S&P. How low can we go? Well, we have 3855, which is the lowest point that we had, which is hovering around 19.9% S&P down peak to trough, right? So that would probably tell you right around 20%. Me, I'm still going with that 3750 level. Again, based on the assumption that there is no recession. If there is a recession, then we'll probably get to 3525. But again, based on yields, 3% yield, 3750 to me seems about fair value for my money. And that's where I want to go to start buying some more. I already made a list, send it to Investment Club. Still buying SpyG tomorrow. I bought some Ethereum today. I bought some Bitcoin. I do every week. Doesn't really make a difference. Let's take a look at VIX together. Volatility index. Volatility index. Very key. Talked about this in the blog. This gap fill still unfilled. 3169, 3167. Got close, but we didn't get there yet. I was always concerned about this gap fill. We talked about this the other day, but guess what? Now we have another gap fill down here, right around 2544. A very small one, but it could definitely retest. So just ping pong balls out there. I think that we do break there. We fill this gap of 3169. Again, it's not a panic. I don't see panic levels out there. 30 VIX is not panic. 50, 45, yes. This is indiscriminate selling of everyone just getting out, cashing out, trying to get liquid. And that's what we seem to be getting. So if you're a long-term investor, this is the cycles that you get with a Fed tightening. We haven't seen Fed tightening since 2018, and we saw exactly what happened there. I think it's very important to kind of give context on all these moves, guys. Again, if you own a company today, I'm just going to pick one. Let's say you own today, let's go with a really good one here. What's a good company that I could see here? Let's take a look at, let's see, I'm just going to pick one here. I don't want to pick tech. Let's do O'Reilly Auto Parts. O'Reilly Auto Parts has been pretty steady. Auto part manufacturers have been pretty steady. Again, today down 9%. 9%. Anything with the consumer, anything consumer cyclical defensive got smoked today unless you were a TJ Maxx. But Booking Holdings, remember the CEO of United raised their guidance. Bookings are up. They had a great quarter, but they were down 4.848%. And we've already seen the pivot. We talked about this. If you've been watching the aftermarket videos, we've been talking about people going away from buying stuff to doing stuff. We're getting out of there. People are traveling. People are doing stuff in terms of getting out of the house. They don't want to buy stuff, so retail's going to take a hit. We've talked about that. But again, I like Costco for the simple fact that, again, it's a good inflation hedge because people can buy in bulk at one time. So that still brings in revenue as well as their membership fees. Walmart doesn't have membership fees unless you do that. I think it's Walmart Plus or what have you. So I still like Costco. They still have great numbers. A little overvalued, yes, but you're paying a little bit for premium. I'll definitely look to buy some more. But again, PE ratios, guys, super important. Look at what you're buying and why you're buying it and how much you're paying for it. A good stock today is fine. A great company. Apple's not going to go bankrupt anytime soon, but it really matters at what point you buy them. 39.14 today. So again, let's see if we fill this VIX overnight. And if we do, I expect this to bounce at least to getting support around 38.86 and 38.55. Do I think that we can break down a little more? No. I think we're going to go ahead and reject this VIX and come back down and then see if we bounce around 35, 39.50, back to that neckline, and see if we can get to 4,000. I'm going to just shoot shot in the dark. A lot of people like predictions. I'll go with 38.88 as the low of the week for the rest of the week. We do have OPEX on Friday. I think that's when shorts close. I'll say 38.88 as the short of the week. This cascading move that we got today, pretty much overdone in terms of indiscriminate selling, just kind of raising capital. Again, not the best close either. Got a little bit of a bounce. But again, technically speaking, there's not a lot of fear out there. But again, that VIX gap fill is very compelling to see. So, and 10-year yields, again, I bought some TLT. And again, nice bounce. Again, we need to get to 119. But again, you're starting to get the markets are showing you the bond market, which is a little bigger market than the equity market, is showing that really inflation is being tamed and inflation is probably rolling over. So again, I'm trying to see if we get to that peak inflation. We just need one really good piece of news in a time where we don't have much, and that might be enough to light the match. Let's answer some questions. Hey, Carlos, since you've been hearing a lot that Citigroup is so cheap fundamentally, what levels would you look at for monthly and daily levels? We do know that Warren Buffett did buy some of Citibank, or he took a position in Citi. Let's go ahead and bring up the chart. Really a good level here. There is a gap to fill at 44.11. I think that's a good level to start nibbling at in terms of Citi. If you get to 44.11 on Citi, you should be able to get to around 37.75, 37.50 on S&P, which was exactly pretty close to my level to buy. That's what I'm looking for in terms of fair value. Again, that could always be a little lower than that, obviously. Costco, yep, just broke down Costco again, talking about the membership services. I was supposed to go today. I did not go. I didn't get a chance to. When the market is down 1,200 points, you really don't want to do grocery shopping. You want to get back here and see what's happening, obviously. But again, Costco is expensive, guys. 39.54 PE ratio. Let's go to forward guidance PE. You're paying right now 33.91. Now, again, I'm not saying that that's the end all be all. I think it's a premium company. There is a gap fill to the upside. I think that Costco is a little overdone. I would actually want to possibly tomorrow probably nibble a little bit into Costco. I do like that company very much. I may want to buy some. I just didn't get a chance to buy some today. Always love the recap. Sorry if I missed your previous vids and posts. Are you bullish from here on these current levels on Qs and SPY? We're at the end of the year. I think that we do bounce. Yes, I know it seems very ugly today. I still think that inflation, we're going to get one piece of good news somehow. Again, the ultimate optimist that I am. But I do this for a living and I watch this stuff for a living. And I'm seeing that the break-evens, the inflation break-evens are rolling over. I wish I had access to that chart, but I've been looking on Twitter. I don't have a Bloomberg. So I don't have the break-evens, but they are rolling over. So again, I think that inflation is to the point where it's peaking. Remember, the consumer is usually the last to feel anything, right? That's kind of it. You really don't know what's happening unless you watch this every day. So again, I think that 38.88, 38.80 seems to be the low for the week for me. We could easily break that tomorrow. Obviously, now I'll be wrong. Not the first time. But really, the level that I'm looking for is 37.50. That's a good EPS. That'll give you a nice fair value of 17 times on a multiple yield. And 17 times at a 3% 10-year, which we're slightly under, is actually pretty fair value, historically speaking. If we're talking recession talk, again, that could possibly happen. I don't think it will, but a recession is possible. That'll kill inflation at its head. Now you're talking 35.25, which is pretty much right at this level, and you'd be back to November 2020 levels. Very scary to think that all of 2021 gains could be wiped out with that. Very scary, but yes, I do expect that gap to fill on VIX. If that does, I expect it to reject, come back down below 30. We'll get a little bit of a bounce, at least to the neckline here. Now, again, here's the problem, guys. This is what I saw too. The hits just keep on coming, right? And the worst part is the fact that these premiums are so expensive. Take a look at this. So now we had an inverse head and shoulders, we had a pop, then we had a drop, right? So guess what? So now, what do you got here? Maybe a formation of a regular head and shoulders where you retest 40.40 and come back down. I thought that we would bounce off that neckline of 35.50, but we broke that down a couple of handles, well, 40 handles or 35. But again, if we do get that formation, keep in mind that then there's more pain to come. Then you're going to get to around 37.50. The only way, in my opinion, I think that we're starting getting some bullish momentum. If I can be completely honest, where I say, hey, it's over, it's 4,600, and that's very close to all-time highs. So remember, we were just here in March. This is 2 months ago. We were just here. The ultimate kind of bear market bounce, right? Kind of a bear market rally. And then look at this. Remember, it's been 5 weeks consecutive. This might be six for the NASDAQ to be red. That's pretty unprecedented. So the question is really, are these companies in the NASDAQ or in the S&P, are they done forever? Is the world economy over? Is the world over? Do you feel to the point that there's no hope? That's usually when you're pretty close to a buy signal, to be honest, if you're a contrarian. Not there yet, but I'm hearing it. Thoughts of as well, end of 23, total tons of variables there. Again, you have China, Taiwan, China, COVID. You have Russia, Ukraine. You have in inflation. I think inflation gets tamed before Ukraine and Russia gets solved, and even before China COVID lockdowns end. So really, we're really hoping the world from the Fed. It's a lot to ask for. They're really doing their job. Let's say they're cutting prices. Here it is. You're seeing it on asset prices. They're removing the punch bowl. There is no Fed put. They didn't say, they said neutral rate is right around, I think, 2.5%. That's Fed funds rate. Yeah, we're at like what, 0.75%, 1%. We got a lot more to go to get to neutral rate. So in terms of tightening of financial conditions. Now, we do know the Fed is notorious for cutting rates like that, but when it comes to raising rates, they're very slow. They're very methodical. We talk about it, but cutting rates, no problem. They'll cut rates like it's no big deal. So again, you have to keep that in your back pocket. When does the Fed say, okay, enough is enough, we're good? Is that 3,700 S&P, 36, 35, 3,400? Where does it end? Again, they have to look at asset prices in the stock market too. Last thing they want is a depression. Bureaucrat life. That's what happens in Washington. So we invalidated the inverse and head and shoulders. Yes, the inverse head and shoulder is validated after you broke this right here, this neckline, unfortunately. We were close to 4101, but target happened, and that's what happens in the market, guys. And you're very welcome, as always. And what do you think about shop setup? Again, any kind of high betas is going to be a tough sledding. Now, granted, they did perform better than the NASDAQ, at least that. So not too bad. But looking here, God, I can't believe I'm saying that Shopify at 289 would be the support. The stock was 1,600. I remember at one point. I remember I owned it at 1,200. I sold it way back. And yeah, I just said, no, I'd rather just keep Amazon. But again, sometimes, like you say, when a good company is on sale or a good asset or even something you want to buy is on sale, you're at least going to look, right? You're at least going to see, if you saw, Nissan GTR, which I love those cars, the Skylines, right? I love those cars. If that thing was on sale for 50 grand right now, not only that car is worth how much money, again, granted that the title's fine, and the guy is just basically just trying to raise cash, kind of think of Great Depression sort of thing. I'm not going to lie, I probably want to buy it because I see the value. I think Apple is still valuable. I think Apple's still a hold. Nothing has changed there, in my opinion. My whole IRA is in Apple, and I don't want to sell that thing. That's for my retirement, and I love that company. God, these guys these are good companies, but they're getting thrown out. Throw the baby with the bathwater. Just raise capital. Raise capital. If you were nervous today about your capital position or how much money you have in the bank, you probably sold stocks today, which is completely normal. Again, the problem with investing when you don't have capital is that sometimes you sell when you have to, not when you want to. Trust me, it's better to sell when you want to, not when you have to. When you're back against the wall and you got to get some cash, tough, tough, tough. Tesla, again, the same issue. I mean, we've talked about it, the Twitter thing. Again, that's kind of beating it down. But granted, it's moving with the market, as we know. We know how big Tesla is. Tesla is retesting that 700 level. 653.45 is my next level. That would reach the apex of the last breakout. All of that would be wiped. We're back to 653. After that, 552.60 is your next level. Great earnings, great premium. The question is, are you willing to put your capital for this company that has aggressive growth, granted, but things can change quickly. They do have a factory in China as well. So it's a lot of stuff going on. I mean, would I want to go out and run buy Tesla here? No. I think, like, how about this? What price would you want to buy a Tesla today? Would you want to pay 60 grand for a Model 3? I wouldn't. But if my neighbor, needed some cash and he needs to sell his Tesla 3 and he said, listen, 20 grand, take it off my hands, or 15 grand, take it off my hands in cash, I'll go to the bank and buy it. I'm being honest because I see the value. Now, again, am I at that place with Tesla where I want to buy? No, I don't think so. Again, I still think we have more to go. Again, we need a grand repricing based on current macro environments. Remember, when the facts change, your perspective needs to change. And again, the market is telling you that there is no buyers for premium right now, for anything premium in terms of stocks. Again, even the best balance sheets, the best management, it doesn't matter. You better be doing something great. And you better be growing at a great clip in order for investors to say, I don't want stocks and that risk. I'll go and buy government bonds that pay me right now 2.886%. And so far, some are actually buying those bonds. I have bought some TLT as well. So there you go. It's a lot to digest, guys. I know right now it's a lot of fear on the plate. But again, I hate to say this, but you got to rip off the bandage, guys. You got to rip it off. I think the best thing is that we get a capitulation event where everyone just gives up. And then you can start kind of the smart ones that held some cash can see the opportunities out there and see what's good value at the end of the day. Again, Tesla. I'm pretty sure you love Tesla today. What if I came to you guys today as a Tesla shareholder and I say, hey, I'll sell you one share for $1,243. Would you buy it? Would you buy my Tesla share at 1243? Because I would sell it to you if you wanted to. Or, it's not that the company's bad. It's just right now it's not valuable. It's not in demand, those stocks. These stocks are not in demand right now. They're just not. What's in demand right now? Companies, well, in a sell-off, there is nothing in demand. Everything is on the table. But when people are buying, people are going to be a lot more careful on what they are buying. Maybe they're not going to buy Nikola. Maybe they're not going to Nikola or NKLA. They're not going to buy C Limited. I don't know. I've heard of the name. I just said that on top of my head. I don't know anything about the company. Or maybe they don't want to buy Beyond Meat. They're going to go for a little more, infrastructure, Union Pacific. They're going to go buy more insurance, a little safer. Again, it's a rotation. You're going to get into more safe stuff. You're going to be worried. I want dividend stocks. Everyone's going to be now reading The Intelligent Investor in a bear market, obviously, because cycles change. That's just what it is. And then once you get another bull market, everyone's going to pile into riskier assets. Rinse, lather, repeat. So remember, guys, all you are doing right now, if you look in the market, if you're an investor, is really nothing. I mean, it depends how old you are. If I'm assuming you're watching this and you're 65 years old, then yeah, I would want to raise some cash as quickly as possible because you need it. Now, if you're in your 20s, nothing has really changed. Time is on your side. At the end of the day, you're just looking for good levels to buy or your dollar cost averaging like I do every week. Now, but that being said, has Costco fundamentally changed their business? Has Apple fundamentally changed their business? Has Goldman Sachs fundamentally changed their business? No. And it's not one stock specific that's getting sold off. It's all of them. So again, you get one of those big sell-off capitulation events, usually ends in some kind of small kind of dead cat bounce, let's just say. I would expect that dead cat bounce to get us around 4,000, maybe 39.80. Gives us an opportunity to kind of play arbitrage calls there, get out, and then we can reshort. Again, we want to short on an uptrend. When you're shorting on a downtrend, right here, I was looking at the puts. So we were at 4,000. I was looking at 395 puts. They were $6 for Friday. The put premiums are so expensive, guys. Look at that. Look at the put call ratios, soared 50%. I know it's a ton of stuff to go over. So again, watch this over and over again. But look at Upstart today, up 3.6%. SoFi up 2.5%. To TJ Maxx, again, you have to give something. You have to be very, very, how do I say this in the best way possible? You better be really good. Your company has to be doing very good things in order to get premium. And that's basically capitalism. You want the best. So that's really how it goes. And I mean, you could watch YouTube anywhere, right? But you're here, right? Appreciate that as always. Have a great rest of your day. We'll catch you guys tomorrow for the morning note. Let's see if that VIX does fill that gap tomorrow. First thing they do, I think the VIX opens right around 7 a.m. So keep an eye on that. Cheers, guys.